Doubling your wealth isn't a tea about chasing the next hot tip or timing the market. Yes, built one tiny habit at a time. And this is what James Clear discovered after studying decades of investor behavior. Are you someone who sets grand financial goals but can't stick to them? Have you ever opened your statements and felt your confidence crumble? What if everything you believed about building wealth was based on a fundamental misunderstanding? In Unlocking Investment Success, The Power of Atomic Habits, James Clear reveals the hidden consistency lever that legendary investors have quietly used to grow fortunes while most people chase overnight miracles. By the end of this video, you'll understand the exact habit blueprint that separates those who build lasting wealth from those trapped in portfolio anxiety. This isn't just another tutorial. It's about transforming your identity as an investor. Imagine defining your financial goals not as distant targets, but as a series of small daily decisions. Most people start by dreaming of six-figure portfolios and then quit when the first setback hits, because they've bypassed the true driver of success, unlocking the power of consistency. But James Clear discovered something counterintuitive. Consistency isn't about willpower, it's about system design. Picture yourself each morning breaking a large goal, say saving $10,000, into tiny actionable steps like transferring just $10. You see the transfer complete, you feel a small jolt of satisfaction, and your brain rewards you for showing up. This triggers our natural reward circuitry, creating a positive feedback loop far more potent than any weekend workshop. We see this in how real estate moguls automate tiny deposits into investment accounts before they even think about their paycheck. To implement this, start by defining one financial goal and then schedule your first micro transfer today. Most beginners overcomplicate by writing lengthy plans. The real power is in starting small and repeating. But this is where it gets interesting. What if you treated investing not as a chore, but as a daily ritual? The 15-minute investor approach is the simplest habit framework you'll ever need. Carve out a short window each day to review performance, read a chart, or scan one news headline. Automate contributions so that before you sip your morning coffee, a preset amount has already moved into your growth account. Leverage technology. Use apps that send you bite-sized insights and alerts when your portfolio drifts. Most people panic and sell when markets wobble because they lack a consistent ritual to anchor their attention. Imagine opening your phone, hearing a soft notification ping, and feeling the familiar routine kick in. That gentle rhythm taps into our brain's craving for predictability and lowers stress when volatility hits. To implement, pick a daily slot, maybe right after breakfast, and attach a simple prompt, like an alarm labeled 15-minute investor. Most people overcomplicate by trying to learn every strategy at once. The real power is in building the habit first. This one principle alone could stabilize your returns. But when combined with what I'm about to show you next, it becomes exponentially more powerful. I'm curious, have you ever noticed how a small, consistent action feels easier over time? Let me know in the comments, because the next insight builds directly on this. When markets swing 10 or 20%, most investors lose their nerve and sell at the worst possible moment. But embracing market volatility through a long-term perspective flips the script. Most people see drops as danger signals, because we're wired to react to losses more strongly than gains. After studying behavioral economists, James Clear discovered that framing volatility as a friend rather than a foe transforms your emotional response. Imagine viewing a market dip like a clearance sale, an opportunity, not a crisis. Feel the tension shift to relief as you place an extra purchase order or simply hold steady. This mental reframe taps into our evolutionary bias toward threat detection and repurposes it for opportunity spotting. We see this in how legendary investors like John Bogle never abandoned their index funds during crashes. They viewed dips as dividends. To implement, write down one affirmation: market swings are my opportunity. Most amateurs overcomplicate by monitoring every blip. The real power lies in a disciplined, calm mindset, but this is where it gets interesting. The compound effect in action is the cornerstone of wealth creation. Visualize the impact of consistent small actions. $10 here, 2 minutes of review there, day after day, year after year. Compound interest multiplies your money, but tiny habits multiply your potential. Most people underestimate this because they focus on one-time windfalls instead of cumulative growth. After modeling real portfolios, James Clear showed that 2 minutes of daily checking plus an automated weekly transfer can outperform sporadic lump sum investments simply because you avoid emotional mistakes. Feel the excitement as you project a small curve rising steadily over decades rather than the wild roller coaster everyone else rides. This taps into our brain's love of gradual improvement and secure growth. We see this in savers who started with pocket change and ended up with six-figure portfolios in less than 10 years. To implement, visualize your balance growing in small, steady increments and set up automatic contributions that match. Most beginners overcomplicate by chasing dividends. The real power is in harnessing consistency. What James Clear discovered next changes everything. Surround yourself with supportive resources and communities. This is your investing ecosystem. Most people try to go it alone and fall prey to confirmation bias and echo chambers. But when you join online forums, follow credible advisors, and share small wins with peers, you activate social proof and accountability. Imagine a group chat where every time you log your 15-minute investor session, you get a thumbs up and a quick insight from someone who's been there. That feeling of connection releases oxytocin and reinforces your habit loop. We see this in masterminds, where investors meet monthly to celebrate micro wins and troubleshoot small setbacks. To implement, find one community, Reddit, Discord, or a local meetup, and commit to sharing your progress twice a week. Most people overcomplicate by skimming multiple groups. The real power is in deep engagement, but this is where it gets interesting. This next insight from James Clear is personally the most transformative for me. If you've found a different tactic most valuable, share which one below. When I first encountered these ideas in unlocking investment success, I was overwhelmed by market complexity. Now I see building wealth as a simple series of tiny steps. Of all the insights we've covered, remember these three. First, power lives in consistency, not intensity. Second, rituals turn investing into a daily habit, eliminating decision fatigue. Finally, the compound effect transforms small actions into life-changing outcomes. Here's my challenge to you. In the next 24 hours, take just 10 minutes to set up your first 15-minute investor ritual and automate a contribution. This tiny step activates everything we've discussed. This isn't just about growing your portfolio. It is about becoming the kind of person who builds wealth effortlessly. In my next video, I'll reveal how these habits intersect with advanced behavioral finance to unlock hidden market inefficiencies. Subscribe now so you don't miss the unexpected connection between habit science and alpha generation. Small habits shape your financial destiny, and that changes everything.